Hello, everybody, and good afternoon. Hope you're well on a beautiful, sunny Tuesday afternoon. I am so excited to welcome you to the next of our Essential series. As you should know by now, these are topical and technical and engaging sessions all about different themes within the private client world. So, this afternoon, really delighted to be inviting two experts across the US UK connected clients field, where we're looking at navigating global mobility. We have Swaati and Amy Hill of LGT Wealth Management, who are going to unpack the critical financial, legal, and practical considerations for families, entrepreneurs, and advisors straddling both sides of the Atlantic. As always, if you do have any questions, feel free to pop them in the chat. Otherwise, if you're watching this on replay, hello to you again. And I'm going to bring the ladies in now and find out a little bit more about what they do, who they help, and what we are going to be talking about. Hi, good afternoon, ladies. How are you?
Hi, Lottie. I'm good. Thanks for having us.
Welcome.
Thanks for having us, Lottie.
Hello. So, kick off. Let's introduce yourselves. Who are you? What do you do? And who are your typical clients?
Yeah. So I'm Amy Hill. I'm a wealth manager at LGT US. Predominantly what I do as a wealth manager is working with US connected clients. That's kind of our niche in terms of who we are and what we do at LGT Wealth Management US. We're part of LGT as a wider business. So we're a Liechtenstein private bank. But the niche of what we do is working with US connected clients. So green card holders, citizens, accidental Americans, people going over to live in the US, beneficiaries of travel, students, that kind of thing. So that's kind of who we're working with. And predominantly my role is supporting them with their wealth planning and thinking about the holistic planning and navigating both sides of the ponds and how we support them with that and the structuring. A bit about me in terms of who I am. I've been with LGT for, nearly 3 years. It's gone quick. Prior to that, I've spent some time at Fidelity, and a lot of my career was spent in Asia, in Hong Kong, about 10 years, working for a boutique asset manager. So a lot of that is working with international families, and that's kind of been our specialty.
Wonderful. Thank you. Great. Amy, over to you, Swaati.
Yeah, I mean, the kind of clients I work with, alongside Amy, it's the same. We support each other basically, and the clients. My role is in wealth planning. I'm a traditional financial planner from background. I have been at LGT nearly 6 years now, and working in financial planning for just shy of 20 years. What my role really is to sort of support our clients on a more holistic basis, looking at how they define and reach their financial goals and objectives. A lot of that can do with cash flow modelling, really testing their plan and seeing how that works for them and if they're going to on track to meet their goals or we need to make changes along the way.
Fab. Well, thank you, ladies. So, covering global mobility, what does that actually mean in the context of a US UK connected client, and why is that becoming increasingly complex if we didn't have a couple of ideas already in the back of our mind?
Well, we chose today to talk about that because I think it's a growing theme in our business, and particularly this year in particular, with lots of movement in and out of the UK and from the US as well. So that's come up in a lot more of our conversations about with clients where they want to be and how they want to spend their time. So global mobility is, I guess, a theme that continues to play a huge role for high net worth individuals, right? I think COVID accelerated that with the ability for people to work from home, work remotely, entrepreneurs and professionals, it changed the way people think about business and where they want to settle. And Brexit obviously also changed the landscape from a UK perspective for people thinking about if they want to go and live in Europe. The UK used to be the first port of call. Now that's changed, and it's kind of thinking about navigating where in Europe they want to be, how they can reside there, and the likes of. And so I think for globally mobile families, which I think is a lot of people nowadays, to be perfectly honest, families who hold multiple citizenships, have assets in multiple jurisdictions, that's a big part of our business, and supporting them is complex because of the nature of having assets, different citizenships, how we're structuring the wealth, to think about how that impacts the tax, residency, the US piece. It's a tough one. And I think also for maybe high net worth individuals want to spend time in many different places, especially at the moment. We're seeing, people who want to spend some time in the US, some time in the UK, but maybe not be, UK tax resident. So it's thinking about how we support them with that, and the growing tax piece around that, and the transparency has increased around that, which makes it very complex.
Yeah, definitely. Becoming a global citizen and a global residence, and no fixed abode.
Yeah, exactly. I don't want to pay tax anywhere. That's a bit difficult.
No.
Yeah. Especially when we're connected citizens, right? I think they have to pay tax regardless of where they are. So I think it's, really complex for them to really understand where they're going to fall into residency, and what if there is double tax treaties and where they're going to be.
Yeah, and I think we forget that it's also the same for us as Brits.
Yeah, exactly. Yeah.
If we try and get anywhere.
Yeah, it's I know, with the new budget here, and obviously the geopolitical piece, people are thinking very differently about where they want to be more long term, and that flexibility is a key bit that high net worth individuals want to have. And the visa landscape is a challenge right now in the US, and also obviously in the UK as well. There isn't really a route for people to come on if you're a high net worth individual at this moment in time. Which is wild.
Labour are doing some interesting things at the moment, make life difficult for many people. From your perspective, though, what are some of the most common misconceptions that high net worths have when relocating or structuring to come from the US, across the US and the UK, let's say?
I think one of the big ones really is not necessarily thinking that you need to get pre-arrival advice. A lot of individuals will go, oh, well, it's speak the same country, speak the same language, and hopefully, everything will just translate and it'll be fine. But there's a lot of differences between the way things are taxed and treated between one country and the other. And even though there is a double tax treaty in place, we need to be mindful of those things, and sort of pre-arrival planning is really important. Again, misunderstanding the dual tax system. So I think we see sometimes Americans coming over to the UK and not realising that they need to still continue to file in the US, even though they're filing here in the UK as well, and being compliant. Differences in the tax years. So the US runs on a calendar year for a tax year, whereas the UK we run, funnily, from the 6th of April. And I think those sorts of things are just understanding those differences, especially when you're receiving income later on in a calendar year, how that would fall in to making sure you've got taxes on credit to offset the tax that you're going to have to pay in the US. I think inefficient investments, I think we'll touch on that as well later on. Not informing your advisor that you are US connected. Sometimes that happens a lot. And therefore you can get wrapped up in you can get wrapped up in structures, or we see clients going into sort of things that are very UK focused planning structures, and they won't necessarily work for an American, and quite often we'll get brought in to pick that apart and sort of solve what those structures are.
She frozen
a little bit.
Sorry, we're back. Just assuming that your US planning works when you come over to the UK, and similarly your UK planning works when you come over to the US. A lot of the things, we have similar words, but it doesn't mean that they translate the same. So trust is a big one of those, I think, and estate planning really needs some looking at before you come across.
Well, and doesn't that impact on pensions as well? Because we have them in a trust structure, and then the US are can't compute.
Yeah, basically, I think you have to get good tax advice on your pensions when you're in the UK as an American citizen, just making sure that how they're going to be read across via the treaty and how they need to be filed. It can increase your financial tax reporting requirement, I suppose. It's more compliance, although with compliance comes cost, because there's cost of the advisors to file those. So yeah, just need to weigh those up to make sure you're in the right sort of pension wrapper for you.
Yeah, definitely. And I guess, you know, we're talking a lot about tax here. Where might clients often trip up? I know you've mentioned ones who sort of forget that they are an American. That can be a major trip up. But there must be other examples where, citizen-based taxation for the US.
Really I think the big one is like not telling your advisors that they know about each other, right? So many times we'll meet with clients, they're like, oh, well, I have a US advisor. Oh, okay. So we need to kind of like see everything. And I think that's coordinating, even if you have a US advisor and you have a UK advisor or somewhere else, that's fine, but just make sure everyone's talking to each other. Because if they're not, then we don't know what's happening and if things are working efficiently, both sides of wherever you're going to be. And that is a lot of what Swaati and I do, is unpicking things. And, you know, I think getting advice early, you know, 8 to 6 months minimum before the move, ideally, or as soon as you get here if you haven't been able to do it before. The new budget and the FIG regime, we can talk about that, helps a little bit if you've not been here before in terms of a window. But there are things like, as Swaati talked about, trusts, they just don't work very well in the UK, really, at this moment in time.
Yeah, I just say they wouldn't necessarily. I mean, they might work, but they need a lot of like understanding.
Yeah, exactly.
Differences are, and sometimes you might want to make sure that you've changed the trustees before you've moved across, so you don't accidentally bring them across as a UK trust, for instance. So I think there's a few things to make sure you're aware of. Did you mention LLCs and S corps? So I think they're the other structures that you just need to be mindful of. If you have those, they're taxed slightly differently in the UK from where they are in the US. So the US would see them as transparent from a view, whereas we don't.
It might be helpful to just give a quick definition on what those are. The LCC and she's gone. S corp. Do you want to give a little definition on those, Amy?
Yeah, so we're talking about limited liability companies ultimately. So structuring of how companies are set up for entrepreneurs ultimately. And she's back.
Sorry.
And ultimately, I say, just carrying on in terms of how entrepreneurs or businesses are set up, and just ensuring that they work for being in the UK, if you're in the UK and the US. And that double layering doesn't generally work from a tax perspective in the UK, and can actually end up being double taxation here. So,
yes, fun. That's definitely a lot of food for thought. Why would anybody do it? So how should globally mobile families approach investment and wealth structuring when navigating both of these jurisdictions? Like, yes, number one, come to you, because actually there is a lot of burden there and complexity. But are there any other pointers that you can offer us?
Yeah, I think, well, we talked about kind of coordination, right? Coordinating who everybody's talking to and making sure that accountants, lawyers, advisors are all talking to one another. That's a great starting point. I think also thinking about the structuring and the wealth planning holistically, to make sure that ultimately we know where everything is and we can kind of think about you as a collective. And that helps in the planning perspective from protection, estate planning, wealth generation, in terms of wealth growth, in terms of what we're trying to do in those different phases of life, and making sure that it's tax optimal. And I think it also, we've talked a lot about tax, but also thinking about what people's values and what their goals are. I think that's probably also the top one, and people tend to forget about that. It's, you know, it's about where I want to live should drive more than the tax, hopefully. And that's a big one to remind people of, I think. And it's just thinking about, well, what are the options I have, and how can I do it?
You don't want to be living in a gilded cage where you are just sort of at the mercy of the jurisdictions and the tax and not living your life.
Exactly. And if you worked hard for the money, like is partly a reminder is to enjoy that, and that's what it's there for. So a lot of what Swaati and I do together is kind of like cash flow managing and cash flow planning and managing that out and supporting clients with that decision making and providing a framework for that. And I think that's really powerful in terms of thinking about how things should be structured, when might be a good time to gift, education planning, all of that. Gifting is a big one, especially in the UK, just given the differences in the estate tax and how we navigate that. We've also talked a little bit about the underlying investments in a portfolio. So ensuring that the underlying investments are structured optimally for being a US and UK person, if that's applicable, or someone who's living in the UK. And the concept of actually making sure that if you have any mutual funds in there, that they have dual UK and US reporting status, else they can be taxed quite onerously. And that's not a position that people really want to be in. So that's a big part of our work, is kind of supporting them with unpicking that and structuring things more efficiently, ultimately.
I think efficiency is definitely a really good rule to follow when it comes to something where it is so complex. It's, keeping it as simple and as efficient as possible, so you know when you can use your money and how much you can use, and what the actual ramifications of that might look like, because you don't want to get to the end of your amazing career, or hoping to leave a legacy, and actually you find out the legacy is going to HMRC or the IRS.
Yeah, exactly. Yeah, I think, and a lot of people don't understand that the estate planning here is so different to the US, and that's a big part of what we need to do is to help manage that and education around that. It's also thinking about education in the next generation, and that's quite a lot of our work, is actually thinking about, well, if someone's going to inherit quite a lot of wealth, there is kind of a mindset shift to that, and supporting people with that, I think, is important.
Are you able to share some of those differences with the estate planning? I know that there's like a huge allowance that you get in the States. It's sort of 22 million or something compared to our 325 here grand. But are you able to just sort of spell out what some of those differences are?
Maybe I'll let Swaati jump in there.
Yeah, no, that's fine. I can do that. So here in the UK, we're aware of it. We all have like a 325,000 nil rate band, which is what we can leave, unless of course you qualify for residential property relief as well, and then you can leave another 175. But that relief is all we get. Over and above that, we can give away as much as we want at the moment, but you just need to survive 7 years from giving those gifts away, and then they fall off our estate calculation altogether. Whereas in the US, at the moment, I think it's just shy of 14 million an individual has as their estate and gift tax allowance, but it is a lifetime limit. It's going to go up to 15 million next year, and that's per individual. So if you're a married couple, both US citizens, then obviously you can double that. So that's a significant amount that you can leave, pass on during your lifetime and on death. So there's quite a big difference between one and the other.
Yeah. What's the tax on the residual if you had over 14 million?
It's the same tax rate that we have here in the UK, so it's 40%.
It would be really interesting to look at actually what the stats are and what they generate a year from IHD. Does anyone really pay it?
Yeah, so it's a very different position, right?
Yeah.
So, and I think for many Americans that come over here, it's hard to get their head around how low our limit has been, and our limit's been low for a really long time. So, and most people who are property, are over that limit just by that alone. So, so a key part of our work is thinking about when to gift and how. Or other ways that you might be able to mitigate that, insurance, for example.
Definitely. Well, I think
Sorry, I was going to say, an understanding of the client's planning on going back to the US at some point. And just sort of weighing it up. But you have to keep it flexible because clients do change their mind.
Life happens. You can have the most perfect plan, but actually there's a curveball. There's a job opportunity, and now they're off to Singapore, or their mother's ill and they've got to go back and see them and live in the States with it. There's things you can never be concrete with these sorts of plans. I think leaving those buffers for security and preservation, like mentally and financially.
Yeah, I think that leads back to what Amy said about being flexible, not having too rigid structures around what you're building. If you're going to be a globally mobile kind of family and moving from one country to another, I think you need to be able to pick up and move your assets fairly easily.
Yeah, definitely. And actually, that brings on to a nice point about how, you know, how can families actually protect their wealth in different scenarios, such as marriage or divorce or inheritance. What are some of the tools or tips that you would share?
Yeah, I think there's lots to consider in that question. I think, you know, from a marriage perspective, you know, if you're, you know, people with different citizenship in the marriage, it's thinking about, okay, well, who owns what title? If it's a US person married to a Brit, for example, who's only a Brit, then it's probably best to keep things separated, just easier from a filing perspective, and just thinking about who owns what. It's just cleaner, particularly property. We can come on to that. Just property is treated in a different way for a US person to hold, which makes it not so tax optimal as just a Brit. For marriage also, I think, is, if we're thinking about protecting wealth, is prenups. So that's a big part. It's just thinking about, if you have an existing prenup and you're moving jurisdiction, just ensuring that prenup works for wherever you're going to be. That's a big one I think people forget about, particularly if they've done it in the States, because probate's done at state level. Prenups are done at state level. So just ensuring that they're accurate and reflect where the client's going to be. Moreover, I guess on marriage, is just thinking about, if you're going to gift anything, how you're going to do that, making sure that's done in the right way. Divorce, I think, is a tough one. You know, you do a lot of that work as well. So I think it's a lot of the work that Swaati and I do with that is thinking holistically and supporting one of the individuals with, you know, the lawyer that's involved, and thinking about the financial split, how that's going to impact the individual and their lifestyle. And also thinking about jurisdiction. That's a big one, right? Which jurisdiction they're going to file, and obviously the UK is probably the favourite jurisdiction. Yeah. And supporting clients with how they're going to do that, and how they're going to work with that. So a lot of our work with that is actually modelling out what the split would look like, how it impacts the individual's life, and the goals and the family and things like that.
Yeah. I just think, part of that is sort of evaluating what those assets look like in individuals' hands. So it might look very different in a US person's hands versus a UK person, when you take into account the net tax position. So what might look favourable on paper, gross level, may not be further down the line. So I think that's really useful to have that overlay early on, so that you can avoid any missteps in the resolution.
Definitely.
Yes,
and we just, sorry.
Sorry, I was going to say to Amy, that might take you on a bit to the real estate point that you wanted to mention.
Yes, that's what I was just going to say. Explain a little bit more about that.
Yeah, so obviously in the UK, if you're a Brit, you have primary property residence relief, meaning that if you live in your home and it's your main home, that when you sell it, there's no capital gain tax due, ultimately. Now, which is nice. If you're a Brit, if you're a US person owning a UK property, that's not the case. You have an allowance up to $250,000 US dollars on the gain, but anything over that gain is treated as a capital gain, as taxed at 20% in the US. So that is a key thing to think about when a couple is buying property. Whose name to buy it in? How would that work? And if there's any structuring that needs to be done around that.
Is it worth mentioning about mortgages as well, because they have a bit of a fun thing there?
Yeah, exactly. So there's this concept called phantom mortgages, ultimately. So if you've got any lending against the house, you have to think about the FX rates and what happens to the FX rates in the time that you've owned the property and the lending on that. And there could be what we call a phantom gain on it that you don't see, but what's happened in the currency markets means that there's actually a gain on that part of the lending. So there's lots of things to consider if a US person is buying property, and I think people really forget about that.
What that looks like. And I suppose as well, when they're buying for kids, you know, if they're coming over here to study, they're coming to university over here, the parents are like, yeah, we'll just buy you a house. It's like, oh, not quite as straightforward as that.
Exactly. Yeah. And the other piece I think we talked about is kind of like inheritance, just thinking about a lot of the work we do is talking with perhaps young professionals who may inherit funds in the coming years, and it's thinking about how they might inherit that. So if there's a trust structure in place in the US, making sure that that works for someone who's a UK resident, and ensuring that that's reviewed just to make sure that that's going to be as optimal as possible. And that can be a tricky conversation, I think, for people to have with parents, right? But it's an important one.
Yeah, I think ultimately parents quite often will make their planning but haven't considered that one of the children or more have moved over to the UK, and if you've got that unbalance, if you've got some children living in the US and some just in the UK, there could be a mixed match of treatment for the UK individuals, and therefore some advice might need to be taken by the parents to understand those implications. But it's quite hard, like you say, for the individuals to have those conversations with their parents sometimes, and the parents don't necessarily want to open up about the planning they've done. So we would encourage that as much as possible.
Yeah, it's difficult.
Family dynamics.
Yeah, it makes the job interesting, right?
Definitely. Okay, big question. Crystal ball. How can or could clients future-proof their wealth planning against political or policy changes in both jurisdictions, given that currency fluctuations can undermine long-term strategies as well? How might they manage foreign exchange risk? So how do we manage the things that are out of our control?
Yeah. And especially right now, I think, the geopolitical piece as well is we're having lots of conversations about that. I think the key one is diversification, right? Diversification, if we're thinking about currency, portfolios, custody. So thinking about where you might want to book the assets, if you've got a presence in different jurisdictions, kind of spreading that out. But I think diversification is probably the key, especially this year. We've seen that, right? Given where the dollar's gone compared to sterling, is just thinking about how we support clients, and also thinking about income need. What is the income need? What currency is that in, and how we support clients with that. So that's probably one of the pieces in terms of the FX. I think, a lot of the what if scenarios that Swaati and I work with in that financial planning, kind of that cash flow piece. We can model out lots of things, inflation being high for a long time, tax rates being high, and say, okay, well, what if these scenarios happen? What happens to your financial plan? That can provide people a lot of comfort in terms of what their decisions they're going to make. Obviously, a lot of those things are out of our control, and how we manage the portfolios, obviously, actively to support that. But ultimately, we don't know what we don't know.
And again, back to flexibility.
Yeah, exactly.
Yeah,
I think that's the key. Especially if someone doesn't know where they're going to be, which is often the case, right? You speak with the client, how long are you going to be in the UK? Or I don't know. Okay, well, thinking about that you've got a plan that works for wherever you're going to be. And I think that's the key thing that we can support them with.
Yeah. Well, maybe just I think at the moment we're definitely seeing in the run up to the UK budget is clients just needing to understand the impact of maybe making snap decisions. So maybe we're drawing money out of pensions at the moment, for instance, is just one thing that we're seeing a lot of. And it's like, well, let's just take a step back and look at what does that do to the plan if these changes come in, and does it actually take you off track? And if you don't need to take those monies right now, do you want to do that? Even if those impacts come in, is it really going to move anything on the dial?
Well, exactly. And especially with some of these quite significant changes that they're proposing, in the next 10 years or 20 years when you might be retiring, it might all settle back down again. And
I mean, just talking about inheritance tax on pensions, for instance, just
exactly.
touch it. I mean, I think it was only 10 years ago where we had a death tax charge on pensions, and it was removed, and then we had they were basically treated as inheritance tax tools. So things can change over 10 years, definitely. So.
Yeah, I think nothing knee jerk. I think that's the part of it, because anything can change at this moment in time, and if you've got a long-term plan, then it's kind of maybe irrelevant.
Definitely, thank you. Okay, more crystal ball gazing. How do you, or what do you see? Are there any trends with your clients? But how do you expect global mobility to change over the next decade, given these increased geopolitical challenges and ever-evolving tax rules?
I think global mobility will continue. I think that's kind of just increased. I think there might be more friction in terms of how people do that and in terms of tax. That's probably the key piece we see. But I see I think a lot of our clients, high net worth, kids want to go to school in the US, or they want to go to business school in Asia, or wherever they be, or might do a stint in different jurisdictions. I think that piece is continuing, and obviously the flexibility in working in different locations has helped that. But I think there is going to be a rub in just how people do that, right? And we're seeing that already just in Europe with the visa situation, how different countries have opened and closed those routes, and there's different things to navigate around that. I think that will continue, and expect that tax arbitrage is harder, right? I don't see that's going to be much easier unless you're going to Bermuda.
Better weather there.
Yeah.
Yeah, where are you seeing some of these hotspots then? You've got sort of Cayman, everyone's talking about Milan. Dubai has some sort of charm, apparently, mostly a tax charm, I think, for people. That there are sort of some hotspots. I don't know if you're seeing where globally.
Yeah, actually, I think we're seeing Italy's talked about a lot. I've not seen many people pull the trigger yet, but that's a big one. Especially if people got a big liquidity event coming up. It's pretty attractive. Asia, a bit, and actually we're seeing a little bit move to the US. From a tax perspective, that's a bit more palatable than the UK at this moment in time.
It's really interesting, actually, to see where people are moving, and for what reasons.
I think a lot of people are thinking about maybe being US resident, but having presence spending time in different places ultimately. And I think that's become more valuable to people, is that flexibility to be where they want to be.
That is the word. That is the word of the day: flexibility. Financial planning.
We also see, I think, when people start to have grandchildren, they tend to end up where the grandchildren are.
Yeah, that's a really good point. Yeah, why not? Why not? Should we wait for Swaati? I don't know what she's doing.
Not sure what happened. My laptop's completely just killed the camera and turned off. So sorry.
Oh, we can still hear you. You're just a nice white circle with a little sort of pulsing circle.
Sorry.
That's okay. Do you have any crystal ball ideas on global mobility, Swaati? In the dark?
I don't know what Amy covered at the very end there. So
fine. No, don't worry. That's an annoying question then. Right. Why don't we go to the bonus question at the end? If you could give US UK connected clients one golden rule to follow when navigating global mobility, what would it be? It cannot be flexibility.
Get advice early. Build a good team around you that can support you, a team that understands the dual complexities of being cross-border. That's what I'd say.
I'd reiterate, just plan early. Like, if the more time you have, the easier it's going to be. And the team that supports you and understands both jurisdictions, or all the jurisdictions where you have assets, right? And is looking at you holistically. I think that's really important.
That is super important. Oh, and one thing, just to run through, sorry, we didn't go through this earlier, but can you just run, like, what is FATCA and all of these sort of like the buzzwords that we have, the W8, things like that Americans have that we don't have over here, that they might be like, oh, I've heard of this, but I don't know what it is.
Sure, I'll quickly do that. So FATCA FATCA and the CRS, they are basically financial reporting standards. It's the transparency between financial institutions having to report to each other. So hence why I was saying American citizens being in the UK, for instance, you might find a few financial institutions won't work with Americans purely because of the amount of reporting that they need to do through FATCA. And so it's ensuring that you're working with people that can help you and support you. What else is there? W8 bends and things like that you mentioned, I think they are part of the FATCA reporting. It's about making sure that you get the right withholding tax on your US assets, depending on whether you're a US taxpayer or not. And then we have 401ks and IRAs in terms of pensions. Those are US pension plans. They work quite similarly to our defined contribution plans, a 401k and an IRA. And then you might hear terms like a Roth IRA or a Roth 401k. They're as closest to what we would get as a ISA, but they are a pension plan in the US, and they basically are funded by post-tax money like our ISAs are. But yeah, there's an age limit when you can draw them out, and then you draw them out tax-free, but they grow up gross. Nice.
Thank you. Whistle stop tour of some fun acronyms. Thank you both so much for giving such a comprehensive overview on global mobility for US-UK clients. As we explored, there are many considerations to be made, whether or not you are a resident alien, as they might call you, or you are a non-dom, or you are married to an American. You know, there are so many iterations of what it might look like to be a US connected client. So it is super important, A, that you identify whether or not you are one, and B, you tell your advisors if you find out that that is the case. Open communication and flexibility. But yeah, thank you both so much. Thank you for everybody for tuning in. And if you do have any questions, please do let us know. But yeah, thank you. Super interesting.
Yeah, thanks, Lottie. Great. Thanks, Lottie.
Thank you. Right, we'll see you next week. Thank you. See you soon. Bye-bye.